Marksman Capital presents.
In the previous topic, we've talked about trend lines, and trend lines, what we find is very unreliable because one thing we know is trend lines are very mechanical. Now, what we need is something that's dynamic and it tracks the price of strength and weaknesses dynamically. And here we move to moving averages, and here's what we need to know. Here's a disclaimer. Please pause the video and read it. Here's the why, the what, when. So why should we actually even use moving average? To read the health of a trend, number one. And number two, what I can find is over the years, strong fundamental stocks tend to bounce off the moving averages and a specific key support consistently. All right. Point number two is very important. And we don't use the moving averages alone as an indicator. We use this to combine with the entire chart pattern. And point number three, what I usually use is I will use it on weekly candles because I find that weekly candles are very reliable. Although some of the stocks may respect daily candles and also monthly candles in some cases, but those are very rare. So weekly candles are the ones that I use the most frequently. I use it to time the investment and also do some position trades. So position trades meaning that the trades will last 6 months to 2 years. Okay, now here's a conceptual formula that the average, when we talk about moving average, is actually a formula that is actually the average of the last specific range of a candle's closing price. Right? It takes the average of the candle's closing price. So for example, if we take the past 10 days or 10 days simple moving average, that we are taking this number right here. All right, for 10 numbers for the latest past 10 days, and we sum it up all together and divide it by 10. So sum it up all together, we get 60, and divided by 10, we get 6. And this is automatically done in the trading platform itself. So we do not have to calculate, and we just have to know the concept. And this gives us the idea if the stock in the average of 10 days is weakening or strengthening. Right? So it gives us a certain indication of the health of the trend. So, well, what are the strategies that is used? So we go long on key areas. Now, what exactly do I mean on going long on key areas? And this is what I mean. Now, moving averages are like safety nets. And most of all, before we even use moving averages, we need to qualify the stocks that are very strong fundamentally. And of course, here I've been using this 4 different moving averages. And we have a 50-day simple moving average that is considered the fastest moving average. Then we have a fast moving average, 100 slow simple moving average, then slow moving average 150, and the slowest one is 200 simple moving average. And the 200 simple moving average is considered the last line of defense. And at times, if the price breaks below this, it causes a lot of panic to a lot of retail traders. You see that why on the later part. Now, for us to have a very nice trend is that the moving averages has to open up evenly one part to another from one part to one moving average to another has to be spread evenly, just like a traditional Chinese fan. All right, in case you don't know, this is Chinese fan, paper fan, or you can call it. So spreads out quite evenly. And now, for example, if you have price action right here, it's bouncing off some moving averages, and we tend to draw the previous support. It could be even here, and it could be here. So we might not know which support it tends to choose to bounce off or either one of moving average. But as long as a turning point on a specific support level, and if price breaches below temporarily and then closes above in either one of these bullish candles, it could be a bullish pin bar, it could be a bullish ice cream bar, or a regular bullish bar. As long as it is above this horizontal key support line, then it is good to add in some positions going long. So then if it rallies, then the next point for us to look at is once the price breaks the previous resistance, it can always turn into support, but we'll look at which of the key moving average it lands on. And it is temporarily breaching that and closes right above. And at the same time, uh, at this area, we need to look for either one of these candles. All right. So it's pretty simple, the concept. And most of the traders, they will ask after I presented this is that they they ask me, Derek, is it that simple? Yep, it's that simple. When a stock is trending, this is what I look at. And you'll see why on the later part. Right? So here it is. It can either land on this support or resistance turn into support. Okay, let's go to examples. And now, strong fundamental stocks, they tend to bounce off consistently in either one of the moving averages, weekly moving averages. So let's say, for example, Microsoft uh, right here, the stock is actually showing us that it's actually there's some price respects this area. There is some resistance previously, and if breaks above, it has turned into support. So there's some rally right here, it comes back and tests in this area. So forming more reaction or respect in these levels. And finally, it breaches temporarily and forms a ice cream bar, bullish ice cream bar right here. Then price started to rally right up there. And as you could see, this stock right here, the price action chooses to bounce off the 50 moving average as long as it is decisively closing above the 50 moving average and it starts to retest those areas, price rallies from there. So a little bit further, right? So here you have a strong rally, price comes and retests the previous resistance and has turned into support. If you look at this candle right here, this huge candle closing decisively upwards this key area, all right, that is the key reversal point, and that is where we go long after the candle closes. You can wait, but as a trader, but as an investor, we could actually go long as this. If this is close to Friday and price is going to close around this area, then we could take a long position as an investor, right? So okay, and price starts to rally from there. Pretty simple. All right, so let's move on. And recently we have this price action. Price has actually chosen to bounce off the 50 moving average. And there's a few times that these candles, these bullish candles, ice cream stick, bullish ice cream bar, sorry, and regular bullish candle has actually formed. So, and it has actually breached this support temporarily, forming some. We call this bear trap very often. It's actually to take out the stop losses, those who has gone long over here. Okay, that's quite consistent. And if we look at the bigger picture, we can see maybe in 2 years once we were able to actually take one of these trades, high quality trades, right? It's not the quantity that matters, it is the quality that matters. So let's look on more examples. Amazon is another strong fundamental stock. And if I zoom into this part right here, let's magnify that part. It has chosen the support right there. And also there was some resistance right here. So it has actually turned around that area. Right, turn around. So you have a bullish candle, and what I like is I like flash downs like this, strong flash down and key upon breaching a support, and there's a key reversal candle right there. There's where I actually go long, or you could wait for it to close above the 50 moving average, and you could go long over here if you want more confirmation. But the thing is that if you wait for more confirmation, that you might actually buy at a higher price. All right, but it's of course more reliable when you have more confirmation. So pros and cons on that. But do remember, strong fundamental stocks, no matter how low the technicals go, eventually one day the stock will eventually recover, and it will always respect the fundamentals in the long run, right? In the long term. Short term, anything can happen. So let's look at this. There's some consistency. Breaches the support, chooses the 100 weekly moving average, and then rallies again, comes back and revisit those support, and it goes on. So now right here, what we need to take note is that if price overextends, flushes up strongly, like this area example, this rally, it's a strong flush up, and this is far apart. If you look at this price action, it is far apart from the 50 moving average. All right. So and what I usually do is that I do not go long here when even if it forms some candle, bullish candle, because and right here, this 50 moving average is very far apart from these three slower moving averages. Usually, usually I would not take an investment position at this moment, because very likely the next few more bounce or the next bounce, it will actually breach lower, and it comes into deeper one of these slower moving averages. Like in this case, this has actually consolidated for 2 years, or you can say that it's constrained in liquid for 2 years before now it bounces off with key reversal candles and starts rallying, right? And so we have a more opportunity over here to go long, as it actually has already tested the 150 moving average. All right, and still Amazon's fundamentals are still strong. All right, so you can see that sometimes you have to wait for a few years, sometimes you have to wait for 2 years once, and of course you might have 30 to 50 stocks in your in your watch list. So you you might have entered other stocks in between before you come to this. All right, right. TMO, one of my favorite stock, and this is what I actually see. It's a very low beta stock, although it's in biotech. And again, you can see the concept is pretty simple. Bridge above the previous resistance, comes back and tests the support, closes with one of the key reversal candle, bullish ice cream bar, and then you have the price actually closes above the 50 moving average decisively with a lot of conviction over there and starts rallying. And then let's zoom out a little bit, look at the big picture, animate a little bit. Again, it comes back and forces below the key moving average, one of the key moving average and key support. At the same time, in confluence, then there's a pin bar right here, closes there, go long, and a lot of people, professional traders, they go long from here and takes the stock price upwards. Right, looks pretty simple. And here, okay, this is something that I would likely have missed out. And usually what I see, if price is far apart from the 50 moving average, well, yes, it takes quite a long time to, what we can say, consolidate, maybe half a year or more before it starts to rally. So in this case, I would have missed out this entry. It's because usually I would like to see a larger bear trap or a deeper cut into this line temporarily before it closes upwards. So I could have missed this. And then, well, there's always another chance, right? So right here, price has actually, sorry, the line should be here longer. All right, missed out the line. Apologies for that. And well, there's some support right here also as well that it came down, flushed down, bounces off over there, respected this support, bridge downwards, starts to test the previous resistance and temporary bridge down and closes upwards decisively. Right, so this is one of the key, some of the key characteristics if you are trading or if you're going long on strong fundamental stocks. Um, Sometimes, no matter how hard the stock is beaten down, that it will always recover, right? It has a lot higher probability to recover than if you just look at price action itself on any other stocks that are not strong fundamentally. Okay, now here's another strong fundamental stock, but it has higher volatility because you can see that the price actually action when it retraces 40 or 40 over percent. Right, so I mean I've seen it retrace 40 over percent in most times, and but the concept is the same. So overstretched or overextended from 50 moving average, pulls back, finds one of key support, but this one's barely even touching the 100 moving average. But here's another time that it retraces, that it touches the moving average, forming key reversal candle. When to go long, the candle that closes above the key support. And you can see it comes back and retest, giving you more opportunity to actually go long. And here comes back, retest on the key support, closes up decisively. You could go long if you're a swing trader over here. All right, but I'm more of a long-term position trader, so I wouldn't have bothered that with that. All right. Okay, then here, this is something I would have missed out because it barely even touched the 50 moving average, but the price structure is pretty nice. You have candles closing way above that. All right, so again, here's some support, and this is deep. This is deep. I like deep retracements because if it's beaten down badly, then the chances for it to go high from here or may consolidate maybe half a year before it rallies, it's a higher probability on what I see here. All right, so it has actually tested just right there, 150 moving average and close above the 100 moving average right here. All right, so you could actually wait for it to come and retest this key area before it goes up or even comes lower. And probably at the time, 200 moving average is already here. Right, could happen sometimes, depending on the situations, geopolitical situations. But remember, a strong fundamental stocks will always recover in a longer term duration. Right, so now I've shown you enough examples and one of the rare instances when we talk about this. So now we knew that the price, if it actually bounces off from 50, 100, 150 moving average, or even 200. Now, what if it breaches the 200 moving average? And what do we do? So now let's say this strong fundamental stock ASML is one of the monopoly stock in photolithographic, one of the process in actually manufacturing microchip, and they do supply their equipments to Taiwan Semicon. Uh, I mean on semicon equipment to manufacture microchips. And this is where I would say this stock, when you have a key support right here, this is temporarily reaching 200 weekly moving average, and it's inducing a lot of panic. I mean, if you have bought around these areas, which is slowly waving up 45-degree, and here you have 90-degree drop, consolidates for a while and drops again. And this is where a lot of traders and investors would be panicking. And this is the highest liquid part where the smart money could turn it around instantly. You can see the next candle. If I zoom in a little bit more, you can see that the this candle and even short sellers who have actually came into this. So you have a lot of sellers here, and it's always a good time to be contrarian when the market makers or the smart money have bought it and turned that around. So they're trapped. I mean, they're trapped in this pattern. So the next thing you know, it comes and retest, then it starts to rally. So that's a temporarily panic, and it's a It's where they seek the smart money seek liquid in this part, the circle area. Temporary uh, break downwards. There's a symmetrical triangle, temporary break, or we can call it a failed breakout. And this is where the price turns around. So rare instances, but it does happen to strong fundamental stocks. And most of the people have the perception that if it breaks below 200 moving average, then it is a free fall. There's a possibility that there will be a free fall. All right, so let's move on. Facebook, also rare instances compared to most of the other stocks. Before that, it has actually shown respect on bouncing off 50 moving average or 100 moving average, bounces off here. Then it breaks below 200 moving average for twice temporarily, right? Twice temporarily. Let's zoom in. And this is where it caused a lot of panic. And there was this data scandal over here around July 2017, if I'm not mistaken, or June 2008, June 2008, and you can see that the price actually, where I went long over here. There's a double bottom actually right here. All right, it's a strong fundamental stock. Well, you could wait, after it has rally upwards and closes way above the neckline, you could actually go long over here, and it's still okay. Strong fundamental stocks tend to recover no matter how deep it retraces. And again, during the pandemic crash, it temporarily breaks downward. This part, it did not close way above the 200 moving average. But here, this is the candle that closes above, and this is another, uh, we call it bear trap. So this is an indicator for us to go long this candle right here. Right? It might be a little bit late, but if you're doing position trade, you want to see more upside potential almost immediately. Is that after it closes way above, decisively above the 200 moving average. Okay, now recently we have this happening. Facebook turning into metaverse, transforming into metaverse company, and there was a huge panic. It has now retraced about 50%. I've been buying up quite a number of shares, adding more positions over here before it rallies up. So right now it's sitting nicely. It's sitting nicely at key resistance right here. That's broken. All right. So once it closes above 50 moving average, if you're trading, doing swing trading, you're looking for a few weeks profit, you might have a chance on entering this stock right here. Okay, so now Activision, one of my favorite game provider, and mobile, now it's going to mobile gaming as well. And this has actually breached below 200 moving average, and it doesn't actually close above in a shorter amount of time. You can see that it has some rejection. There's more panic after that. And then when it chooses to close above the 200 moving average, then you have confirmation on rally. Comes back retest. This is during the pandemic crash, if I'm not mistaken. Pandemic crash, tested the support, closes back above this 200 moving average. This candle right here, it's after this candle, it's good to go long. You can see the rally is strong after that. Now, this is really just to keep our trading simple, although the signals are not very frequent. Uh, but if there is, then you have very high probability trade. So what we call this? We call this rounding bottom, and I would like to emphasize a little bit. Okay, rounding bottom right here. It has a neckline. You can see it comes back, retest the neckline, rallies, retest the neckline, finally rallies strongly after that. Right. Now, this is what I would like to avoid. If you see, if it's far away from the moving average, the price, fastest moving average, it tends to pull back stronger. And at times, it goes below 200 moving average. All right. So it's like a gravity. The further you go, the harder you fall. And now we move Activision into daily. We plotted this into a daily chart just to see the rounding bottom. It's more obvious. You could see Of course, there's some resistance here, here, here. So I'm just taking the average resistance, right? Sorry, resistance turned into support right here. Sometimes you couldn't draw. They are they don't actually come up and form a nice, very nice neckline of resistance right here. But you can see overall the key characteristics that it forms a bottom that is round circle, a half circle. Some people call it saucer bottom, right? Or cup and handle, you can call it. Well, it looks like a cup, then it has a handle right here. So it's like a coffee cup, right? Okay, and what to look for? If you look into these patterns, if they it's an accumulation pattern from smart money. Some stocks are not so liquid like Activision compared to Facebook or Microsoft. Then it takes longer for them to fill in the net long quota, right? The net long book. So once they fill enough positions, then they allow the market to take up there will be a momentum trigger here, then they allow the market to take this out. Of course, in the markup phase, they will tend to shake out the weak hands along the way. And now this is how I see it. We should see a lot of wave ups and flush down, giving us opportunity to enter some of these bear traps, even in the markup phase. But of course, ideally around this part, this area where you have the the most opportunity to actually have enjoy this rally right here before it breaks out. All right, but it has to be again strong fundamental stocks like an A bot in this case flushes down 90-degree, 45-degree goes up, flushes down. Remember always 45-degree wave up. This is what we look for accumulation patterns. 90-degree flush downs, temporarily breaking one of the key support and closing upwards right here. We go long on after the bear traps. Of course, some bear traps don't actually go below the other one. So here closes right upwards. People go long, and then it shakes them out. Maybe because this stock is strong, maybe the liquidity is not enough for the smart money to fill in all the quota. It stays in sideways, consolidates longer, but forming a very nice rounding bottom pattern. All right, this is one of my favorite pattern, and as it actually closes, this time it doesn't actually comes back and retest this neckline. It actually once there's this candle close up here, the next candle they take it up. Then after that, the rallies doesn't even look back. It rallies off just like that in the candle. And then the moving averages starts to spread out evenly on one. Moving averages sometimes if it starts to be all messed up in between when it's consolidating. So it's no longer much in effect, but we have to actually look at the price structure, or this chart pattern on that. All right, and of course the fundamentals are very important. We only overlay the technical charts on top of the fundamentals before we render, timing it at the end. Well, what happens if we look at weak fundamental stocks? Very often the weak fundamental stocks, when they actually break below the 200 moving average, like in this case, then there's a free fall. And like in this case, General Electric is one of weak fundamental stock. The revenues has been falling, it has been losing money on the net income and even cash flow. So combined with the patterns, it has a rounding top. It breaks the neckline at the same time, then it actually falls down. So in a way, what we can say here, okay, if we move into daily charts, most of the time when there's a panic, the price action respects if it's bearish, respects the 50 moving average or even faster moving average. It respects faster moving average most times. All right, in this case, you can see that in this one, there's a bull trap because it flushes up temporarily. Right? But the way, I would actually, I wouldn't go, I could go short in this, here around this area. Right after the red candle here, when it comes back and retests the 50 moving average daily. All right, this is not weekly because panic is stronger than euphoria. or you may have something what they call bulls climb the stairs and bears jump out of the windows. All right, so same meaning as this, right? Bears jump out from the window, uh, declines, comes back, retests 50 moving average, falls down pretty fast, forms a bull trap, then goes down. So I'll mark that in this chart right here. Okay. So I mean, it's not to say we make more money when we want to short a stock. It's just that we make the money faster, right? At times when there's a panic. So this is profiting from panic, if you could, right? But of course, you can combine it with the chart pattern and the moving averages. That looks simple, right? So another thing, this is for if you have been using moving averages, and I don't really use momentum indicators, oscillators. Well, my charts, I want to keep it clean. I want to look at the price action and moving averages itself. It tells me a lot. So again, you see, this is moving far apart from the fastest moving average, right? And this fastest moving average is far apart from these three slow moving averages. Now, very likely, if it bounces off a few times, it tends to fail and it goes down, sometimes break even below the 200 moving average. And this is where here in this area, you might want to look for some price pattern. It might form ascending triangle, rounding bottom, or maybe it could form falling wedge before it starts to go up. So this is where you really need to depend on the chart pattern before you go long. So the best way is that after some patterns has formed, and if the 200 moving average is here, and we have like one candle closing decisively above, that is time to go. Right now, there's no action for this. I mean, this is just an ETF, but if it is a strong fundamental stock, super strong fundamental stock, then I would have been going long over here. Sorry, around. Okay, but it's an ETF. Anything could have happened, right? So it's hard to study the fundamentals of an ETF. It's just like an album, but the hit song, we gotta look for the hit song, right? But this is just an example. Okay, now this is also a rare instance, and Apple is what I missed out for many years. In 2020 March, there was crash, right? Correction, tested this moving average 100 SMA and closes above that and rallies. So this is where I missed out, and I thought we could have another correction. I mean, we can't have all of them in our portfolio. At times, it's a strong business. I've done the fundamentals research. I like it, but just that the price action is really not in my favor, and it doesn't come into my investment or trading environment. So this is priced far apart from the 50 moving average, and it's far apart from the rest of the tree. This guy is far apart from their friends. Let's not play along. This guy is like going way up. For a long time, it's far apart from the slow moving averages, and the price is just rallying without even touching the 50 SMA. So it's forming some kind of channel right here. But I do really want to go long if it touches either one of these slow moving average. I mean, the deeper the better. And Apple has done very phenomenal revenues gain last year, was 33% overall. I think more than 30% phenomenal gain on the revenues and net income and cash flow, the highest cash flow in the industry, 100 over billion. So this is what I avoid buying when price is too far away from the fastest moving average. Like this case, it's far apart, overextended. I do not want to go long. Just if it rallies without me, I'm okay. I still have other stocks in my portfolio. I'm just waiting for it to come into my trading or actually investment environment. So avoid buying when the fastest moving average is overstretched from the other slow moving averages, right? Like in this case. Right, so yeah, rare instances. Okay, so so this is where I would like to end this presentation, and I wish you happy trading and investing. Striker X here, signing out. Have a good day. If you like this video, please hit the subscribe and like button. and also notification button if you like to get more of these videos. And we also have a Facebook group where we're trading, and we will provide the link below in the description column.